Good morning and welcome to IG's early morning call on IG Live on Monday, the 11th of December. Coming up on today's programme, Currencies on hold. Traders brace for an array of central bank decisions and US inflation data. The street also expects solid second quarter results from Oracle, driven by its cloud business, and oil prices gain after recent declines, supported by US strategic reserves on the rise, whilst oversupply concerns remain. Well, let's start by taking a look at volatility this morning, and the VIX is higher on the day. I'm sorry, you can't see the price chart this morning. We're having some technical issues. But volatility has been lower throughout November, and December has seen a slight increase in volatility, but still lower than last week as investors position themselves for the next Federal Reserve rate decision this week. And with 30 minutes to go until the European markets open, the FTSE, DAX and CAC are all set for a slightly higher open. On Friday, the FTSE closed up and the CAC and DAX also ended the session in positive territory. Travel and leisure stocks led gains while mining stocks fell. Central bank decisions this week will be in focus, of course, and on the equity side, Curry's earnings in the UK will be of interest. Well, what about Asia Pacific overnight? Well, stocks in China slid after data showed persistent deflationary pressures. More on that in a moment. While Japan stocks, the Nikkei jumped on bets its central bank might be done with hiking rates next week. Meanwhile, in the US, the S&P climbed to a new high for the year on Friday. Global attention turned as well on Friday to November US jobs report as investors try to gauge the likely trajectory of interest rates by the Fed going forward. Well, November's non-farm payrolls report showed an unexpected drop in employment. The jobless rate fell 3.7% compared to a forecast of 3.9%. Investors will today be waiting for inflation data, of course, on Tuesday and the next federal rate decision on Wednesday. Well, in other news, China's consumer prices fell the fastest in 3 years last month. CPI dropped 0.5% month on month and year on year. That was more than the median forecast in a Reuters poll of 0.1% decline on a monthly basis and 0.2% fall on an annual basis. Well, meanwhile, factory gate deflation also deepened, falling for a 14th consecutive month. PPI fell 3% year on year against a 2% drop in October. Economists had predicted a 2.8% fall in November. Well, this latest data can be seen as yet another headwind for the country's policymakers. Analysts interpret this set of data as a warning about persistently sluggish demand and a supply glut. Well, we saw earlier the reaction on equity markets with the Hang Seng down around 2%. Meanwhile, the yuan is weakening to a 3-week low against the dollar this morning. The US Federal Reserve will start its 2-day meeting tomorrow and conclude it on Wednesday with its last decision of the year. Since the Fed's last meeting, the labour market has showed signs of cooling off and consumer inflation decelerated further. Well, for these reasons, the Fed fund rate target range is widely expected to remain at 5.25% to 5.5% for a third consecutive time. The market is now looking for clues on how soon the Fed will start cutting rates. Currently, the CME Fed Watch tool forecasts a 90% chance of a Fed rate cut by May 2024. With a 60% possibility of a cut at the March meeting. Well, Thursday will also be a key day for the markets as both the Bank of England and ECB will decide on rates. The Bank of England board members are widely expected to keep the policy rate unchanged at 5.25%. The market also anticipates the MPC to stick to its previous higher for longer approach in response to persistently high inflation. Well, Bank of England Governor Andrew Bailey also said last month it's too early to be thinking about rate cuts. Well, the euro-pound currency pair will be the cross of choice as 45 minutes after the Bank of England decision, the ECB will deliver its own. The main refinancing rate is forecast to remain at 4.5%. The facility rate is expected to stay at 4%. And the marginal lending rate is to remain at 4.75%. That's what's expected. Well, the ECB's executive board member, Isabel Schnabel, is in charge of market operations, highlighted in a recent Reuters interview that Eurozone inflation has declined faster in October and November. And as a result, she said she does not rule out a rate cut in the first half of 2024, stressing the ECB should remain open to reacting to incoming economic data. Well, in other macro events this week in the UK on Tuesday, the unemployment rate is anticipated to rise to 4.3% in October, which should set a new high since September 2021. Then on Wednesday, UK monthly GDP is due with the UK economy expected to have contracted by 0.1% in October. The 3-month average should be flat. Industrial production is forecast to rise by 1.1% in October year over year and a 1.5% rise the previous month. On Friday, we have GfK consumer confidence. Expectations are for a rise to -21 in December, up from -24 the previous month. This would match the 22-month high already reached in September. In corporate news, Oracle earnings are due tonight after the US closing bell. Well, the street expects earnings of $1.32 per share, which would be a 9% increase on the same quarter last year. Revenue is also anticipated to rise by 6.3% to $13.06 billion. Well, cloud services and license support remain by far the main contributor. Revenue in that segment is expected to grow 24.7% year over year to $10.72 billion. Well, like many, Oracle has joined the artificial intelligence race, an increasingly crowded space in which Oracle wants to play a major role. At the start of the year, Oracle's vice president of AI and data science services said it wanted to become the Netflix of AI by allowing companies to bring the best AI software and hardware to Oracle Cloud infrastructure. Last month, Oracle disclosed a multi-year agreement with Microsoft to support AI services growth. Well, year to date, its share price has risen about 40%. Well, later this week, we also expect quarterly earnings from Adobe and Costco Wholesale. Adobe projects total revenues between $4.975 billion and $5.25 for the fourth quarter. Costco held off raising its membership fee again in September when it last updated investors, though the company warned the increase is a matter of when, not if, which will be watched for. Wall Street is expecting a year-over-year increase in earnings on higher revenues. Meanwhile, in oil prices, both Brent and WTI are trading higher this morning. US crude's taken a fall since the end of November, but it's been recovering losses since Thursday. Brent has also been on a downward trend since 20th of October, but December has also seen it recover losses since last Thursday. It comes as US efforts to replenish strategic reserves provided some support, although concerns of a crude oversupply and softer fuel demand growth next year persists. Last Friday, the Baker Hughes total rig count rose by 1 to 626. The number of oil rigs in operation fell to 503 from 505. Meanwhile, just to note, the price of gold is now back below $2,000 after hitting 2147 at the start of the month. It had remained above the 2000 level since 24th of November as investors turn to the safe haven asset with political tensions and the dollar playing into the performance. Well, that's all we've got time for this morning on Early Morning Call. Thank you very much for listening, and please do tune in to Beat the Street ahead of the Wall Street Open this afternoon with Angeline Ong.